Hey, good morning, everybody. Welcome back to today's episode of Stocks for Breakfast. My name is Pete Renzulli. Today is Wednesday, February 26, 2020. Today, we're going to talk about three things. We're going to talk about picking a bottom, how to do it properly. We're going to discuss profit taking. And last but not least, we're going to discuss trading the news and how to trade the news. Obviously, coronavirus, a massive, massive part of what's going on right now, if not 100% of what's going on right now. So we're going to go get right into it today, no delay. By the way, if you find this video helpful, please click subscribe below. I'd really love for you to come back. I think we're going to be giving a lot of not only good trading ideas every morning, but also some lessons from my career as a professional trader when I owned my firm in New York City. So click the subscribe button and let's go right over to the charts. So first, we're really going to drill the point home just by making everybody acutely aware of what's going on. And this is actually the heat map of the S&P 500 from yesterday. You can see there was a couple of pockets opportunity, believe it or not, of stocks that were strong. HPQ, one that comes to mind here, and Xerox. That's really it. So the question that comes into play now is exactly what do we do? Now, we're more talking about active trading here. We're not talking about holding stuff for a year. This is not investing. We're stock trading pro, looking for trades that are going to last anywhere from 1 hour up to, let's say, a week to 2 weeks, something along those lines. We do have longer term trades that we call position trades, but the majority of what we do is we're looking for monthly cash flow. We're looking to grow our account and grow our equity as reliably as possible. And if you haven't been able to do that for yourself, you definitely want to subscribe to the videos because it's kind of my specialty. The difference between chart reading and tape reading is what we try and teach every day in these videos. We're looking to take you from chart reader who can spot setups to tape reader, which is somebody who actually understands how to make money from those setups. And they're dramatically, dramatically different. And if you've been trading for a while, you probably already know that. So what we're going to do is we're going to take you right into the chart and help you understand exactly what's going on from a active trading perspective and what levels you should be watching for the market. Now, if you happen to have tuned in or saw the email that I sent out yesterday afternoon, which, by the way, if you're not, I'll leave a link below where you can sign up. The Smart Money Alerts goes out every morning. It's free. I actually sent an alert out yesterday afternoon calling the bottom in the market. And it's something that I've been discussing a little bit in the emails recently. There's accumulation and there's distribution. Those are longer term daily chart plays where you can see the smart money actually working orders to either get long if it's in the case of accumulation, or get short, or building a short position, or exiting a longer term long position over time, usually over weeks and months. In this case, we're looking at something that's called, on the floor of the New York Stock Exchange, it was called a cleanup print, which basically means it was a bunch of large orders that were negotiated and usually ends the massive selling pressure. I call it exhaustion, basically the same thing. But in this case here, you can see on the 5-minute chart, which, by the way, I also said in yesterday's email, the 5-minute chart and the daily chart, in my 20 years of experience, seems to be the cleanest and the most reliable way of using the price and volume tape reading combination. For some reason, the 15-minute chart, the hourly chart, 30-minute charts, they show the volume. They don't tell you as clear whether it's a pause you can expect to continue with volume, or whether it's like we're talking about right now, where I think it was about 2:30 yesterday afternoon, I sent an email that said the market has bottomed. And I'm going to talk about what that means in a second when we get to actually talking about trading the news as one of the three things we're going to talk about today. But I want to make it very clear. There's certain ways to pick a bottom that are smart. You never want to be buying when it's going down. Yes, we have the longer term picture where the market is absolutely roaring bull market. And we'll go back to what the daily chart looks like here in a second. The longer term picture. Now, the comments that I've been getting, the feedback based on emails, and again, once you sign up for the Smart Money Alert, you'll have my email. You can always shoot me a question or leave a comment below the video. You have months and months and months of buying, right? Let me take volume off of there. And then you have 2 days of selling. Months and months and months versus 2 days. Yes, it's massive. Yes, it happened very quickly. But that does not invalidate all of the others buying. Generally speaking, markets just don't turn around in 2 days and now all of a sudden you should be looking for sell shorts. we should still be looking for spots to buy. Now, there's the right way to buy during a move down like this, and there is a amateur way, which is you just start bidding as it's continuing to go down, which is just flat out dumb. Okay. What we're going to do now is we're going to discuss something. I'm going to take number 3, which is trading news, and I'm going to put that to the top of what we're going to discuss right now. First of all, really strong news, whether it's an earnings play, whether it's an FDA announcement, whether the CEO quits, coronavirus obviously right here, really strong news completely overtakes chart points. And for some reason, it's very hard to get that across because traders do such a tremendous job studying and working hard and reading the charts, and something happens, moves a stock based on news, and then they go and look at the chart and be like, well, it should stop there because there was support from January. That's not the way the news works. When you're trading the news, you're trading that isolated incident, and then you want to use your tape reading skills, your short-term chart reading skills to trade around certain levels while that increase in volatility is happening, so you can take advantage of it and make the maximum amount of money in the shortest amount of time because of that news-driven volatility. So to give you an extreme example of what I'm talking about right now, if you don't know, my background is day trading. I've been day trading since April of 2000. I had 2 firms in the city. So day traders would be short selling this right now with complete conviction, especially yesterday. And I'll bring up the 15-minute chart here and tell you exactly why. Day traders have been short selling this with extreme conviction yesterday because we were below the opening price yesterday. And if you don't know, if you're new to my videos, the opening price and the opening price window, there you go, it's probably easier to see, are the biggest day trading, what's the word I'm looking for? The biggest significant reference points for day traders. We want to know, are we above or below the opening price? And then we keep moving it out. Are we above or below the opening trading range? Are we above or below yesterday's close? Are we above or below yesterday's high? Are we above or below the 20-period moving average? And generally, that's the widest a day trader will go because we're trading for right now. Now, short term, we were below most of those key moving averages, and we were below yesterday's opening price. So the entire day yesterday, day traders have been looking for short sales with conviction, fully knowing that it's a longer-term bullish market. That doesn't mean it was an A-plus trade. It means that it was a volatility, news-driven play where you'd be looking for signals for it to stop and not short sell anymore. So the email that I sent yesterday afternoon was all about calling a bottom in a news-driven play does not necessarily mean to get long. It doesn't mean to start buying. What it means is you start to tighten up your trailing stop loss so that as stocks are moving down and you start to see it not go down anymore, that doesn't mean it's a time to buy at all. It means as stocks are moving down, in this case, I'm using the SPY as an example, as they're moving down, you move your trailing stop loss down with it. So if it happens to spike again, you're out with the profit at a spot where we believe the market's going to turn around. So exactly what does that mean, turning around? So what it actually means is we are now looking at, we had one last puke here early in the morning, 3 o'clock in the morning, and now we are looking for this level. If you remember yesterday, we drew a box and we said we had to get out of this box. Let me close this one out. We had to get out of this box yesterday in order for a meaningful move to the downside. So these were the pre-market levels that we were looking at, combined with the price action during the day. And we said if we get below these levels, it's going to be an aggressive short for short-term traders. And you can see we got below that level, and it was exactly what day traders wanted to see. Now we're looking at a different box. If you go to the email that I sent yesterday, it was right around 2 o'clock, 2:30, where we had this massive spike in volume in the SPY yesterday over the last hour to 90 minutes of the day. And that's those cleanup prints, large money getting out as fast as possible in as short a period of time as possible. And large smart money means the collective hedge funds and sovereign funds and all of that kind of stuff. It doesn't matter who. Don't worry about who it is. So you can see we got one last puke to the downside, but now we have levels again. Now we have yesterday's levels. We have overnight levels. If you're an active trader, you should know these levels. So now for us to determine if we want to start to look for longs today in this bearish, extremely bearish coronavirus-driven selling that's going on right now, we want the market to tip its hand, to show some proof that we bottomed out. But just as important, as I said in a couple of videos, we want to have a spot that gives us an area to measure risk. So if you're just buying on the way down, you're kind of just guessing. You want the market to reset at some point and give you a stop loss point so that if you buy as it's going down, you want it to at least be moving in your favor so that you have a risk point if that doesn't quite be the bottom yet. So in this case here, we want to be trading, you can see the top of this range here. We don't want to trade if it gets back into this range. So this is the bottom where we might find resistance, as you can see we did here. But in order for us to feel confident this morning, 316, 3160 here, but 316, let me pull up the SPY chart. 316 would be the level on the SPY chart. So what I'd be doing now is I'd be pulling up 316 on my SPY chart, and I would say, okay, I don't see that in the regular trading hours, but that price is meaningful in the overnight hours this morning, and that's the level we need to trade above to start to look for longs. And then you'll probably end up getting today's opening window, which is the first 15-minute candle, getting a break above that level, getting above 316. So you have today's opening window as a stop loss, the bottom of that. And again, depending on how wide that is going to dictate how many shares you take or contracts if you're trading futures. And then you can start looking to build a position. So at least we have and let me pull up the volume again. We have this incredible spike in volume, and I'll show you on the 5-minute chart again from yesterday. This is where I called it. We have the incredible spike in volume, which indicates the mess of larger sell orders is done. Now we just went through a scenario of where you'd be looking to get long. What would need to happen in order to get long? Now, the potential to happen here is if the buying does kick in, which again, we're saying if then, that's what you do in good trading. We might not even get it. If then. If we don't get it, you continue to move your trailing stop loss down. You continue to short, stay short, and book your profits as it's moving down if it happens to bounce. But if we do get it, now you have, if this happens, then I'm doing this, and here is my stop loss. So very important to make a distinction between trading charts where there's no news, trading charts where there's massive news, and getting to the point where you understand you're not picking a bottom, you're making the market give you signals first in price action, first in volume, then in price action, then very specific prices. Now, if you happen to be swing trading or holding your trades a little bit longer, you have a little bit of a different scenario because you're obviously not going to be looking to trade all the way up here and get long at, what's the price here, 332.40, 324.61. That's way up here. You're not going to be taking a $20 flyer. You're going to be waiting for it to get long all the way up here and have your stop loss all the way down here. So what you would typically end up doing is you would be looking at today's price action, looking for a spot to get long. Now, you might miss a massive rally today. That's fine. You either get your price or you don't get involved. I can't express that clearly enough because you want that risk reward window to make sense for you. You don't want to chase and then have your risk all the way down here. It just doesn't make sense. Which, by the way, you can get around that a little bit with smaller share size, because a big mistake that people make is they just trade the same share size all the time. And that's not the way you're supposed to do it. You're supposed to adjust the amount of shares that you buy based on the distance between your entry and your stop loss based on the dollar amount. So you always choose the dollar amount first, and then based on your entry and your stop loss, that tells you how many shares. But my point is this: if the market, and you're swing trading, if the market should happen to open lower or open right around yesterday's low, you could put in a limit order at yesterday's low for a portion of your share size. And then you use a different kind of order that says, if filled, do this. So in other words, if you buy at yesterday's low, that will be the area. So let's say we open flat or open somewhere in that area above yesterday's low and pull back. You're looking to place a limit order down there. If filled, because yesterday's low and that massive volume that we saw in the 5-minute chart, that area, that window of price holds support, there you have a stop loss below today's low and yesterday's low. So you have a relatively smaller stop loss relative to what's going on here without having to wait for prices to get all the way up to this 324 level. It's a little bit advanced. If you're a new trader, first time getting involved in the market, trading coronavirus is probably not the smartest thing in the world. And don't tell me about trading options, because if you don't know options, the volatility and the premiums are through the roof right now. So you're not really buying options at a good price to give yourself a chance to make money. Sure, you can buy options and know your downside, but the price is factored in where you're probably not going to have any chance whatsoever because of the increase in volatility, which increases the premium prices. So a couple of different ways to get involved in the market. I want to finish today's video on one last thing, which is essentially understanding the profit-taking scenarios that just flat out make sense. And I'm actually going to use Apple as an example. And obviously, Apple pulled back with a lot of vengeance, like the rest of the market. So what I want to talk about here is let's actually take the last couple of days out of the equation, because we're not necessarily talking about news right now. We want to talk about if Apple is rallying, or if you're holding a stock over a 2 to 3 day window. How do you know what the right profit target is? How do you know when you should be looking to exit the trade into what you believe is the maximum amount of movement for that stock? It's very simple. You don't ever need to guess what the stock is going to do, because it will literally tell you based on what it's done recently. Now, what's kind of interesting is when I say done recently, these monster moves here from high to low are going to skew the reading I'm about to tell you, but I'm going to show it to you anyway because it's important for you to understand. If you're not on this website, it's actually really great website. You don't. There is a free and a paid service. I use the free service. You might see some ads pop up here, but I don't use it for intraday. I just use it for pre-market scans. But you can see I typed in Apple here, and there's something over here called ATR, which is average true range, and you can see it says average true range 14. That means it's giving us the average true range that Apple trades from low to high over the last 14 days. So obviously the last 14 days, the last couple of days is going to increase that a little bit from the normal. But in this case, let's say Apple has an $8.83 ATR. So what that means is, on average, Apple moves from low to high or high to low over the last 14 days, $8.83. So if you happen to be buying Apple on a pullback, and let's say, like we just talked about, you buy it on yesterday's low, so you actually buy it on the low of today, and you nail the bottom, just for argument's sake, you nail the bottom. Apple starts to rally. Now you have a reference point here of $8.83 from today's low, $8.83 from today's low, plus $8.83. That's your profit target. Now, could it go past that? 100% it could, and I hope it does for you. But if you're looking at the stock, and it normally does $8.83 in this case, as it starts to move up, and here's a monster key for you to learn. As it starts to move up, let's say now the stock has rallied $6.50 on the day, and you haven't found an entry point yet. Or let's say that you haven't found an entry point yet. As it starts to get up to $6.83, you have to start saying to yourself, well, it normally does $8.83. It's already gone 2/3, 75% of what it normally does for the day. How much do I have to risk in order for it to only move another $2? It might not even be worth the trade. So you start to see, knowing these deeper distinctions in the market, being able to create a better argument in the market makes you a better trader, because now you're making better decisions. It's kind of like driving. You're not going to floor it if there's traffic ahead of you. You got stop and go gas. You're not going to be driving on the same road like you did yesterday when nobody was on it. So knowing the average true range of whatever your stock from one day, and if you're not day trading, now you'd be like, okay, 2 days it's gone $8.83. 3 days it's gone $8.83. Yesterday it went $6. Okay, this swing trade might have exhausted itself. I'm going to move up my trailing stop because the buying pressure seems to slow down a little bit. So you never really need to guess profit targets. You just need to know the right levels. So we're not going to get into the charts today. I think it would be kind of smart for you to go into your own individual stocks, use the same exact setup and trading pattern that I just described, where if your stock is opening lower, what level would it need to get through today for you to feel comfortable to look to initiate a new position? So thank you so much. My name is Pete Renzulli. If you have any questions, I'll leave my email below. I'll also leave the link below if you happen to not be getting the emails. Smart Money Alerts goes out every morning with a recap of the video, as well as some other stuff. It's free. All you got to do is click the link, sign up, and submit your email. So have a great afternoon, great trading day, and I will speak to you soon.